Stock of the day today was UPL, up 15%. Now we know why it was falling. Now the deal is over. The stocks saw massive short covering. Havels, L&T Finance, Bata, all of them rallying significantly. Index gainers today, ITC as I mentioned, ICICI, Maruti, Lever, Tata Motors, Tata Steel. Couple of pockets which didn't do too well. Two-wheelers. So the Bajaj numbers and the commentary is hurting the sector now. So Bajaj Auto itself, Hero MotoCorp down quite a bit. HDFC Bank, after slightly disappointing numbers by HDFC Bank standards, was down. In the mid-cap side, there were some more gainers like NCC, Bank of Baroda, Adani Enterprises. So all in all, a good day for the bulls. A breakout finally after a long time. The market closing above that 11,075 mark with market breadth on the positive side. Let's see if this can sustain.
Okay, Anuj, that's a great start to the week. Let's see if the bulls' momentum continues. But here's the big story this evening. The intercredit agreement between banks is finally here. The agreement, which replaces the now defunct Joint Lenders Forum, will try to bind minority lenders in implementing a loan restructuring proposal if 66% banks are in agreement. Let's understand how this works. Venkatesh is here with the footprint of that agreement. Take us through what this entails.
An intercreditor agreement or an interbank agreement became almost inevitable and necessary after the Reserve Bank's February 12th circular. That circular disbanded all the previous arrangements like Joint Lender Forum and said that the moment there is even a one-day default by one of the borrowers, that bank should notify other banks that the borrower has defaulted, and all the banks together should put in a resolution plan. This inevitably called for a group of banks to work together, and hence this intercreditor agreement has been signed by all the banks, a master agreement. Many banks have already signed, and by end of day, 25 banks are expected to sign it. And by the weekend, even private sector banks like ICICI would have referred it to their board and have got it signed. It's basically an arrangement which helps you to save time so that the lead bank takes charge of this defaulting borrower, suggests a resolution plan and goes back to the other guys, the other borrower, lenders, to get their approval. It basically should save time. It is becomes a necessary instrument now that the old Joint Lender Forum doesn't exist. The dissenting lender, has some rights. If he doesn't like the resolution plan, he can sell off his loan at a discount to his share in the resolution plan. Alternatively, he can buy up all the other people's loans, again at a premium to the resolution plan. One doesn't know how much of this will work because who will want to add to their NPAs in a situation like this? So you could find some faults with some of the clauses, but nevertheless, you have to admit that it leaves the banks in a better place today than they were before such an organization existed. It is good that banks have some way in which to organize and deal with borrowers. To that extent, this is a good development.
All right, Lata, thanks for simplifying that for us. We will be addressing this critical story through the day, so stay with us on that. But here's another exclusive from the banking sector. Sources tell CNBC TV18 that the central government has sought an extension for public sector banks to meet the 25% public shareholding norm. Sapna Das is here with the details. Sapna, what exactly has the central government sought at this point?
I want to clarify two things. See, one section of the government is absolutely fine, or rather, the one section of finance ministry is absolutely fine with the fact that the SEBI has not given an extension in terms of relaxation on the 25% public float norm. But another section of the ministry, that is basically the banking division, we are given to understand that a minimum 1 year extension has been sought for the public sector banks to meet this norm. Probably on understood and known grounds, basically the valuations of banks, do not look extremely good at this moment, and also you can't have a bunching of so many offers. So keeping that in mind, on a very rational ground, at least a 1 year extension has been sought. But the other side of the ministry, that is basically the Department of Disinvestment, they do not have any issue with this because this will give a boost, to their own activities in trying to bring as many offenses or as many issues as possible. So on that, they're giving to understand that as of now, there are 14 PSUs, which have to meet this 25% norm. 6 to 7 of them are state PSUs. As far as the 14 CPSUs are concerned, some prominent ones, like, say, for example, NLT, MMTC, some of them are part of this bucket. And you're most likely, Department of Disinvestment will be happy to kind of go ahead with them. So, you can see at least 2-3 big PSUs meeting the 25% float norm, probably during the year. Probably by the end of FY19. So there is, so there are two parts of it. The banking division has asked for the extension of PSUs. However, DFAN is quite all right with this norm, and we can see some activity on that front. because of this non-taxation.
Okay, fair enough, Sapna. Thanks for breaking that up for us. So, two possibilities over here, and of course, Sapna Das will be tracking that very closely. We will stay with macros for now. 2 days ago, on Saturday, the GST Council pruned the 28% tax slab further, bringing down the GST on a number of white goods, ranging from refrigerators, washing machines, small televisions, mixer grinders, water heaters, etc. to 18%. But it's not just the white goods. There was relief for the footwear and the paint industry as well. Manglam Malu, who has been tracking this story for us, is here with the details. Manglam, GST cuts ushering in a positive start to the week for consumer appliances companies. But, what does the math tell you in terms of the sectoral impact?
Well, indeed, a lot of stocks buzzing today after that surprise cut came in from the GST Council's latest meeting on a lot of products. The leader of the pack, of course, was the consumer white goods sector. So we saw big gains come by on Havells, Whirlpool, Voltas, V-Guard, even something like a Bajaj Electricals thrown in there. Because remember, GST on a lot of these appliances was reduced from 28% to 18%. Add to that, the paint stocks, they painted a colorful picture in today's trading session. So the likes of Asian Paints, which reports its results tomorrow, Berger, Kansai, Nerolac, all of them gained in today's trading session. GST on paints has been reduced from 28% to 18% as well. But the stocks that ran away in today's trading session were the footwear stocks. Bata hit a record high, a double benefit for them as well. Good set of numbers, and this GST tailwind has taken that stock to a record high. Along with it ran Liberty and Relaxo footwear too. GST, remember, on footwear was 5% for shoes up to 500 rupees. Now that 500 rupees threshold has been increased to 1,000 rupees. We saw some gains come by in hotel stocks as well, as the GST will now be levied on the rates which are actual rates, not the described or defined tariffs. So that is a positive for that industry. Other than that, we had ethanol for oil companies seeing a cut which came in under 5%. Add to that, we also had some benefits come by on sanitary napkins, though we have to watch out for the actual benefit there, given that they are out of the GST annual, but they still do not get the benefits of input tax credit. We had some brokerage commentary too. Morgan Stanley has written on Asian Paints along with Credit Suisse as well. Morgan Stanley believes this is an opportunity for the industry to accelerate their volumes. Credit Suisse believes that these could be some margin tailwinds come by. At the same time, Morgan Stanley as well as Credit Suisse wrote on Havells too, and Credit Suisse has upped their target price on Havells to 725 rupees.
Okay, fair enough, Manglam. Thanks for that analysis. But let's revisit the other big story of the day. 17 banks have signed the intercreditor agreement and 5 more expected to sign. By evening, Ritu Singh caught up with Sunil Mehta, the non-executive chairman of Punjab National Bank. Here's that conversation.
It has been signed by quite a few banks now, but there are a number of banks that still remain that are not part of this agreement. Could you bring us up to speed with how many banks are expected to be part of this by the end of the day? And what happens to the rest that are still not part of this agreement? How will resolution for with those bankers work?
Yeah. So, as we speak, banks are coming in to sign this agreement. I think we have reached the number of 19 or 20 as we speak now. It's only about 3:45 in the evening. And I'm quite hopeful by end of the day we'll have a number close to 25, if not surpass 25, which is a very good number by the first day itself. And the fact that most of the banks have had to go through a very rigorous discussion in their respective boards and have raised issues and queries which have been responded to, I think it's a fantastic job of all the banks coming together to be able to sign this agreement. The balance who are there, many of them have actually called in and explained to us as to why they were not able to come in today to execute, because they have their board meetings this week, or they are sort of going back to their respective boards for any clarifications. And I'm quite hopeful by the end of this week, we would have most of the banks who would have signed on the dotted line.
But including private banks, sir, because so far it's only the public sector banks that have come on board. What about foreign banks as well, if you could explain?
So let me first deal with the private banks. The private banks have been very much engaged with the IBA in getting their issues and queries raised and resolved. The lawyers have been working overtime, really sort of, I would say, 24/7 in responding to the queries. And I'm quite sure a large number of the private sector banks, some of which will actually sign later this evening, but a large number of them will actually sign during the course of this week.
So if in very simple and brief terms, if you could explain to us how ICA would work, in what spirit and where it fits in the entire Sashakt scheme.
Yeah. So, when the project Sashakt was embarked and the committee was looking at as to why it is taking long for a resolution of these assets, one of the major issues that came up, and when we spoke to many different banks, it was basically a lack of agreement on how the resolution plan should be, first of all, framed and the execution of the same. There were divergent interests, there were divergent views, and whenever the committee of creditors met, sometimes they would not be fully empowered to be able to take the decisions. So we had to come up with the formulation as to how do we deal with the resolution, or at least arriving at what should be the resolution amongst the banks itself. So the intercreditor agreement was that building block which we felt was very important for the banks to have. And this tool, if they use it effectively, which we hope they will, because now they're sort of will be bound under a contract to do that, we will find a larger number of the banks being able to agree on the way the decisions should be made and then coming up with the resolution plan.
So you're dealing with stressed assets of up to 500 crore rupees. What is the quantum of assets that you're talking about that you think under ICA could be resolved in the timeline that we're looking at? When could the first successful resolution case come up, for instance?
So, as I had mentioned earlier, there are about 210,000 crores of stress assets which are below 50 crores as of March 31, 2018. And there are about 310,000 crores of stress assets between 50 and 500 crores. So we're talking about a total about 520,000 crores of stress assets, which comes into this target market, if I can use that terminology, for the ICA to be able to be used effectively in that. But it doesn't really restrict ourselves to that 520,000 crores, because if you look at the next lot, which is between 500 crores and 2,000 crores of assets that are stressed, there are another 310,000 crores there. So I think if partly that can be used there for resolution, the intercreditor agreement, I think we would have achieved our objective.
The National Anti-Profiteering Authority, which is the quasi-judicial body under the Goods and Services Tax System, has dismissed profiteering allegations against e-commerce major Flipkart. Flipkart told NAA that it has refunded over 7,000 customers who had paid higher taxes. Remember, the Anti-Profiteering Authority is currently examining 9 such cases, including cases against Lifestyle, Subway, McDonald's and HUL, to name a few. Timsy Japuria is here with the detail. Timsy, it's a clean sheet for Flipkart, but what are you picking up about the other companies, and what's the next step expected here?
Well, as you rightly mentioned, the National Anti-Profiteering Authority is examining about 8 other cases, excluding Flipkart, where Flipkart has got a clean chit. Now, these cases, as you mentioned, are against majors like Lifestyle, Subway, McDonald's, HUL, etc. And a major relief for Flipkart definitely there, but yes, the National Anti-Profiteering Authority has asked DG Audits to examine all e-commerce players on suo motu basis to check whether they are profiteering, whether they have collected excess taxes, or they haven't passed on the benefit of reduced GST rates. Remember, the last rates which were reduced was in November last year, and this is a case of that particular time itself. So government taking some time, but yes, trying to give a relief to the consumers and the taxpayers. As you mentioned, over 7,254 customers, once National Anti-Profiteering Authority questioned Flipkart, got a refund from Flipkart for paying higher taxes. Now, in the other cases, what National Anti-Profiteering Authority sources are saying, that the HUL case, for example, is under examination. It is at the last stages of investigation, and it is likely that the dues that HUL paid earlier, which was about 120 crore rupees, was not enough. But yes, they are still examining it, and that was again on the account of profiteering, which happened due to rate changes in November last year. Remember, this Saturday also we saw a huge amount of rate corrections, but yes, when you talk of the previous cases, they are yet unsettled. These are the 8 major cases which are lined up for final hearing.
Yeah.
Let's see how soon this comes up. But yes, Anti-Profiteering Authority is definitely in favor of customers. They are going suo moto on complaints.
Very clearly. Thanks, Timsy, for taking us through those details. Now, last week, the Lok Sabha passed the Fugitive Economic Offenders Bill. Once this legislation is cleared by the Rajya Sabha, it will replace the ordinance that allows the investigative agencies to seize legal as well as benami assets of fugitive perpetrators of major financial frauds. As we await the Rajya Sabha nod to this law, Utkarsh Chaturvedi joins in now with some data and analysis on the assets seized so far in key economic offences by the likes of Vijay Mallya and Nirav Modi. Utkarsh, take us through those numbers and, how effective will that bill be given the fact that the size of the assets are actually much smaller than the recovery due?
So since the Fugitive Economic Offenders Ordinance was promulgated earlier this year, the Enforcement Directorate has lost no time in putting to use the powers given in the ordinance to bring offenders to justice. Till date, the ED has gone to court thrice to declare Vijay Mallya, Nirav Modi and Mehul Choksi fugitives. Along with the tag of the offenders, the ED wants permission from courts to confiscate and sell their assets in case these offenders don't return to the country to face prosecution within the stipulated 6 weeks. But will the threat of confiscation and sale of assets be incentive enough for these offenders to come back to India? The numbers bear out a story which is not very encouraging, except in the case of Vijay Mallya. The amount that ED has been able to recover via attachment has not been very high. Let's take a look at the numbers. The fraud allegedly committed by Vijay Mallya amounts to 9,000 crore rupees. The ED has already attached assets worth 12,000 crore rupees. In the Mallya case, the ED will sell these assets if Vijay Mallya does not return to India in the next 6 weeks. Let's have a look at the alleged fraud by Nirav Modi. Out of the alleged fraud amount of 6,400 crore rupees, ED has attachments worth 1,500 crore rupees only. In case of Mehul Choksi, the alleged fraud amount is 7,000 crore rupees, while the attachments are worth only 2,400 crore rupees. In both these cases, ED had claimed high attachment values initially, but after the independent valuations of assets, the values dropped significantly. Similarly, in the case of Jatin Mehta of Winston Diamonds, out of the total fraud amount of 7,000 crores, the attachments are worth 200 crores only. The idea under the Fugitive Economic Offenders Bill is that the confiscation of these assets before conviction will force these offenders to come back to India to face trial. But with the amounts due for confiscation being a very small percentage of the alleged fraud, will it be enough stake to force them to come back?
Oh, well, that is a critical question, definitely, Utkarsh, and we will know in the days to come, or rather in the months to come, on how that will work. But with that, it's time to wrap up this edition of After the Bell. Thanks for watching. Markets Today Talk Back will take all the market action forward on the other side of this very short break. Stay tuned.